Okay, hi guys, welcome to another technical analysis video. So in this video, we'll be going over what is a head and shoulders pattern and how you can make money off of that. So let's just jump into it. So a head and shoulders pattern has three things. It has a left shoulder, a head, and also a right shoulder. So that's why it's called head and shoulders. Here we're looking at the chart behind me. So we can see left shoulder. Just gonna circle that. Left shoulder, this is the head, and this is the right shoulder. What is most common is we can see that this is the left shoulder, the head, and right shoulder. It's as simple as that. So let me just clean up the chart. Chart is cleaned. That's what a head and shoulders look like. It has to have a left shoulder, a head, and a right shoulder. Usually the head is bigger than the shoulders, just like a human's physique. So let's just go over this. So this is a bearish indicator, meaning the sellers are in control, and how to make money off that. So we'll first explain why the sellers are in control. We'll start with the left shoulder. We can see that the buyers took control, pushed the price way up, but sellers were equally as powerful. They pushed the price down, and on the next one, the buyers decided to buy again. It pushed on higher, but once again sellers got back in control, pushed it all the way down. And on the third thing, which is the right shoulder, we can see that the buyers still attempted to get the prices back up higher. They did, but they didn't make a higher high. They made a lower high, which is a bearish indicator. And then the sellers push the price down once again. So we can see that the sellers are in control. And one main thing is what we can see here is when it gets pushed back or when the buyers step in, it is from a level of support. So we can see that once again here, buyer stepped in, and then the sellers pushed it down to support, and then that's where the buyers decided to step in again, push the price all the way up, but sellers once again took control, push it all the way down, and at that same level of support, buyers stepped in again, pushed the price higher, but it made a lower high, and then sellers took control again, pushed it down. So we can see here that the sellers had a bit more control this time because it broke that level of support. So what you can do is you can either, one thing is you can either enter when that level of support breaks, or you can be smart and enter on the second round. There is a possibility where the second round doesn't occur, but then here we can see. Okay, so let's take this scenario. What I will do is, when I'm trading this, I would wait for the second time around usually because I need confirmation. What that means is we know that once support is broken, it can turn into resistance. Why? Because if someone has missed out on short selling on that first round, that's where the person gets another chance to re-enter. So this is a bearish thing. This is basically selling or short selling. And there we go over this. So we can clearly see that it broke the level of the area of support, pushed back down, and once it pushed back down, it did reverse back up to that level of support, previous support, which has now turned into resistance. So that's typically where I would enter, and I would set my stop loss above the area of support, not right on that area, just a little above it, just to be safe. And where can I quit? I can either quit on a lower area of support, or I can quit when the trend reverses. So what we are doing is we're short selling. What we need is a downtrend. A downtrend is made of lower highs and lower lows. So the second it invalidates that by either making a higher low, that's basically when we quit it. So let's just go through this. As you can see, I'm just gonna minimize this for now. I'm just gonna leave that there. Okay, so we entered over here on that second time right here. It made a lower low right around this range, which is good. It pushed back up, made a lower high, which is still good. Pushed back down, made a lower low, which is good. And here we can see that it made a higher high, which is bad. So we can see that right over around this range it has invalidated our trend. So what I would do is I would quit at that level, which is the previous lower low. So that would be here. This is when I would, this area is where I would quit my trade. So let me just draw that. If I was to draw that here, yeah, at somewhere around this area, that's when I would quit the trade, because that's when our trend, which is the downtrend, got invalidated. It made a higher high, and we can clearly see it did proceed to sell off after that, but that's completely fine. I'm not willing to take that risk. Once it invalidates the trend, I'm out of that trade, and I would take another trade in the future if it continues to sell off. So the first thing is we have to play it safe and be smart with it, because trading opportunities can be there across multiple time frames. It's always there. It's just a matter of being smart with it. And let's just go to another example. We're going to Apple. This looks a bit weird, I know, but it's still a head and shoulders pattern. Let's just draw that out. It's very simple. Okay, so we got the left shoulder here, head over here, and we got the right shoulder. The key thing is, let me just draw that better. Left shoulder, head, right shoulder. Once again, let's go to the very basic story behind it. Buyers entered here. It made a uptrend, though the price pushed up, and then the sellers got in control, pushed it all the way down. Once again, buyers decided to step in, push the price all the way high, and then the sellers stepped in again, pushed it all the way down, and the buyers started taking control again, and they did. They pushed the price high, but they didn't make a higher high. Instead, it made a lower high, as we can see here. This is the previous high, this is the new high. It's a lower high, and then sellers got in control again, pushed all the way down. Once again, I would wait for confirmation, wait for that second bounce back. So this is the area of support. What I would do is, once an area of support breaks or the price breaks below that, it can turn into a potential area of resistance, just like we can see here. So what I would do is I would take a short trade, which is selling. Let me just draw that here. So I would enter around that second time, which is on that second round, testing that previous level of support, which has now turned into resistance. So this is the first time around where it broke the level of support and then the price shut down. You can do that if you want to, that's completely fine. Once again, it depends on how you want to trade. It's not financial advice, it's completely up to you. So I would typically wait for that second time around, and what I would do is I would enter when that previous area of support, which has now turned into resistance, is basically where price is. So we can see that right around here the price is testing that previous area of support. What I would do is I would set my stop loss above that area of support. Previous support now turned into resistance, so it's basically resistance now. I would set my stop loss above that area of now resistance, which was previous support, and I would trade it until the trend gets invalidated. Or just gonna draw that this was an area of support. This is where I could have exited, or I can wait until the trade goes against my trend. So what I want is a downtrend. One area that I can quit is somewhere around here, which is not exactly on that level of support, but above that area of support. So I would trade somewhere around here. That's what I would do. Or I can wait until that trend is invalidated, meaning, let me just draw that. So we entered over here. What we want is lower highs and lower lows, which is a downtrend. When we are shorting, we always want a downtrend, meaning we want a lower high and lower low. It made a lower low. It made a lower high. This is the previous high, this is the new high. It's clearly lower, so it's a lower high. Decided to sell off, made a lower low, lower high, lower low, and then around here we can treat this as a lower high. It basically stopped setting lower highs, and then instead it decided to pull back, and the sellers decided to take control. So this, for me, this area would be against my trend. So ideally this is where I would quit. So let me just draw that. That's where I would decide to quit it. So this green rectangle, the bright one, that's my trade. Now this chart is, of course, it's handpicked. It's not always going to be like this. It's going to be less areas of profit, or it could be even more. This was a handpicked chart. So those are the basics, the very basics of trading a head and shoulders. Let's just go through a recap. The very first thing you need is a left shoulder, a head, and a right shoulder. Understand the story behind it. The buyers are stepping in, but at the same time the sellers have equal power. So whatever the buyers do, the sellers match it. And on that right shoulder, which is this, we can see that the buyers have attempted to make a higher high, but they failed because the sellers were stronger. They pushed it all the way down. It broke that level of support, pushed down, and then on that second turn, that's where I would enter. Support turns into resistance, very basic. Support turns into resistance over here. We can see that over here, that's where I would enter. Either one scenario is we take our profit before another area of support, which is below. So this green rectangle is an area of support, as you can see here. It was a previous resistance which turns into support. So one of the key things, support can turn into resistance, resistance can turn into support. So here resistance turns into support, and here support turns into resistance. It's just simple. Yeah, so I could either take my profit somewhere around here, or I could wait until the trend reverses. Our trend is a downtrend, which is lower highs and lower lows. But a reversal could be a higher low or a higher high, any of those two. So in that case, what I would do is I would quit it when it reverses the trend. The second it fails to make a lower low, or the second it sets a higher high. The second it does that, I'm out, because it's against my trading plan, and it's as simple as that. So that's how you can make money shorting head and shoulders. There is also something called the inverse head and shoulders, which is where the buyers are in control, and that's how you can make money longing. If you want me to drop a video on that, just drop a comment below and I will go through that as well. It's a very simple thing. It's just this same ideology, just flip. Just like buying and selling, it's a polar opposite. So yeah, I will leave it there. Hope you had a lovely day. Like and subscribe, and yeah, there will be more videos in the future.